So, what made everyone start unloading their XRP today? Truth is, it wasn't just XRP investors cashing out. The entire crypto market got slammed. And if this isn't the perfect example of how risky trading with leverage can be, I don't know what is. We watched traders get completely wiped out, caught off guard by this sudden move. Now, sometimes these wild price swings in crypto come out of nowhere. But this time, there was actually a clear event that sparked the drop. So, the big question is, does this derail XRP's run toward a new all-time high? And if that explosive, face-melting rally is still in the cards, has this setback thrown us off course? Some analysts believe there's still room for a bit more downside in price. That's part of the picture. But honestly, I'm not seeing anything that screams major delay here. What's interesting is that, despite the sharp dip in both crypto and stocks earlier today, the overall reaction hasn't been extreme. In fact, crypto took a harder hit than stocks. The S&P 500 actually ended the day slightly in the green. Hard to believe, right? Even after the news that set off all this chaos, stocks rebounded faster, while crypto's bounce was noticeably weaker. Still, there's no real sign of full-blown panic from investors. Just to be clear, I'm not a financial advisor, and nothing here is meant as investment advice. I'm simply a crypto enthusiast sharing my thoughts for fun. As of the moment I'm recording this, 4:15 p.m. Central on Thursday, August 14th, 2025 XRP is trading at $3.08. You can see the chart plunged earlier today, and Bitcoin's chart looks almost identical. Flip between the two, and it's basically a copy and paste pattern. So no, this wasn't just about XRP. Meanwhile, the S&P 500 wrapped up the day at 6,468, up a tiny 0.03%, which is pretty wild, considering the kind of market turbulence we just witnessed. So, what exactly kicked this whole thing off? Just check out the headline on your screen. Straight from Reuters. U.S. producer inflation heats up as goods. Services prices soar. In plain English, July saw the sharpest jump in U.S. producer prices in 3 years, fueled by rising costs across both goods and services. That's a sign inflation is gaining momentum, putting the Federal Reserve in a tough position. The Labor Department's hotter-than-expected PPI report hit on Thursday, following earlier data this week showing consumers were paying more for things like dental care and airfare. And to make matters even more interesting, early August jobs data showed no sign of a slowdown in the labor market. Naturally, the headlines were everywhere. Cointelegraph honed in on the market's reaction. Bitcoin's price dipped after the PPI numbers stirred up inflation concerns. The probability of a Fed rate cut next month slid from 99.8% down to 90.5%. That might not seem like a big drop, but before this morning, a cut was almost a lock. And now, that slight bit of uncertainty has investors on edge. Whether you think a rate cut would be good or bad isn't the point. The market wants it, and now it's just a little less convinced it'll happen. And while big swings are nothing new for crypto bull runs, this time there was a clear spark. The news shook some traders, liquidations piled up, and prices plunged. Still, for crypto, this kind of volatility is par for the course. So, how much market value just vanished? About $200 billion since last night. And this came right after Bitcoin smashed through a brand new all-time high. For the first time ever, BTC traded above $124,000 just hours ago. Since then, it's dropped to a 24-hour low of $117,682. Honestly, in the world of crypto, swings like that are nothing unusual. Still, I can't help but think back to when the entire crypto market was worth around $150 billion total. Back in 2017, that was the whole industry. Now, we can see more than that erased in a single day, almost without blinking. And then there was this headline from Decrypt. U.S. will not be purchasing any Bitcoin, Treasury Secretary Bezant says. Some people have pointed to that as a possible reason, or at least a contributing factor, behind the market drop. Personally, I'm not convinced. The timing matches up far too neatly with the inflation report and the dip in the stock market. Sure, It's not exactly bullish news, but I don't see it having any meaningful influence on today's price action. The big moves we witnessed were clearly driven by the broader market reaction, not this particular announcement. Last night, chart analyst Credible Crypto noted that Bitcoin had just set fresh all-time highs, but he also issued a warning. The price action, he said, looked choppy, which often hints we're still stuck in some kind of flat, running, or expanded correction. In simpler terms, even after hitting a record, a pullback was still possible. Sure enough, while the immediate trigger came from the news, his analysis played out almost perfectly. At 10:41 a.m. Central this morning, he posted an update. And there's our pullback. I don't make the rules. I just try to follow them. Impulsive break of highs equals full bull. Corrective break of highs equals fake bull. Simple. He highlighted the $114,000 116K zone as the first likely spot for a meaningful bounce, suggesting that the downside from here could be fairly limited. If that range fails, his next potential bottom target is closer to $110,000, but he stressed that's more of a worst-case scenario, not his base expectation. Even in that lower scenario, his bigger picture view hasn't changed. On his charts, he's still projecting a push toward $140,000, and he doesn't believe this drop will throw off the overall timeline. In his words, nothing major has broken. Bitcoin's still moving in line with global M2, and by extension, so is the rest of the crypto market. Last night, analyst Ali Martinez noted that whales had scooped up a massive 320 million XRP over the past 3 days. And let's be honest, whales rarely end up on the wrong side of the market. Sure, they couldn't have predicted the exact news that would hit and shake prices today, but their optimism clearly hasn't gone anywhere. These aren't the types to panic sell like emotional retail traders chasing every headline. Bottom line, recent XRP buying has come from confident hands, and that's a bullish sign. This morning, Analyst Crypto shared that XRP's 4-hour candle had closed below a key support zone. His warning was that if the $3.09 level isn't reclaimed, more downside could follow. At the moment, we're sitting just a penny under that. Even so, a dip here doesn't change the bigger picture. It's just short-term movement. Then, at 3:57 p.m., Analyst Crypto Insight UK pointed out that liquidity above XRP has been building for the past 2 days. His call? Send it to $4.34 with haste. In other words, he's looking for price discovery and a push to new all-time highs, completely unfazed by this morning's sell-off. Earlier in the day, at 8:45 a.m., analyst CW observed that all high-leverage long positions in XRP had been wiped out. And honestly, it proves the point I keep making. Leverage is a ticking time bomb for almost everyone. It was pure carnage out there. Some traders just experienced their worst financial day ever because they couldn't resist overloading their positions. Crypto already offers wild gains if you just hold through the cycles. But no, they had to over-leverage, and now they're sitting at zero. You do you, but I'll keep my strategy simple. No leverage, period. Boom, bam, done. At 10:11 a.m., analyst KC Trades highlighted that XRP plunged 7% in only 15 minutes, with more than $420 million in leverage positions wiped out across the US crypto market. That single candle was one of the sharpest shakeouts we've seen in a while, hitting almost every major coin. She mentioned XRP fell from the $3.21 support straight to $3 though checking Livecoin Watch, I saw a low of $3.06, so maybe a few exchanges printed it lower. Not that it really matters. The point is, it dropped fast. From that low, XRP quickly climbed back above key golden retracement levels at $3.11. To me, that screams liquidity hunt. On the chart, you can see the wicks dipping under key levels, while the candle bodies still respected major support. A classic liquidity grab. Zooming out, it looks more like a double bottom pattern than a true breakdown. The move stayed well above the macro 0.5 fib retrace at $2.76, and today's low actually held the 0.382 retrace at $3 perfectly. When you really look at it, there's no solid fundamental reason for such a sharp drop. Just market mechanics doing their thing. Some traders are pointing fingers at the inflation data. Others are blaming that recycled headline about the U.S. not buying Bitcoin for reserves. Personally, I think this was a straightforward reaction to the inflation numbers. The timing of the drop matches the release of that report almost to the minute. To me, that's a direct cause and effect. As analyst KC Trades noted, the bigger takeaway is that the macro bullish setup is still in place. As long as XRP doesn't break below $2.76, the upward targets remain intact. Based on the most recent price extensions, the next major breakout zone still lines up around $4.70. The immediate level to watch is $3.11. Holding that support after this shakeout could light a fire under the price. With shorts now trapped, after XRP reclaimed that zone, there's a real chance this could trigger another leg higher. Key supports to keep on the radar: $3.11 and $3 even. Resistance levels: $3.21, then $3.41, and finally the all-time high at $3.66. Macro bullish target, $4.70. Yes, this was pure short-term chaos, but let's be honest, we're used to it. In the bigger picture, nothing's changed. Sure, this kind of move rattles some people, but not me. If I let every price swing get under my skin, I wouldn't have lasted almost 8 years in this market. Come November, that's exactly how long I'll have been in crypto. And this sort of volatility is just business as usual. I'm still convinced the overall crypto market will keep growing over time. Even if the worst-case scenario happened, say the top is already in and we're heading for a multi-year bear market, I'd still hold. I'd keep earning, keep buying, and then decide if I want to sell during the next bull run. My strategy doesn't change because of days like this. I'm still excited to be here because in the long run, I believe it's all going to be worth more. Look, this isn't something we can control. I've set up my portfolio exactly how I want it, and I'm glad I have. Worst case scenario, I end up waiting a little longer than I'd like for things to play out. Oh no, life-changing wealth arrives a couple of years later than planned. Come on, that's hardly a tragedy. We have to be realistic here. Even in that scenario, the asset class isn't disappearing. It's going to keep expanding. Give it enough time, and we'll see the total crypto market cap hit $10 trillion, then tens of trillions, and eventually well over $100 trillion. Keep your eyes on the bigger goal. Analyst C. Greg Crypto summed it up well. His view is that if XRP holds above $3.13 on the daily chart, the recent liquidation mess is essentially erased. If price retests the $2.65 zone, then we'd need confirmation there. But his emphasis was on $3.30 being the real line in the sand. 3 daily closes above that, and any lingering bearish outlook is gone. Same logic applies. $3.30 is the key level to avoid slipping toward $2.65. Overall macro outlook, super mega bullish, in his words. So once again, we've got another seasoned analyst saying, here are the levels to watch, but big picture, nothing's broken. And honestly, that's the common theme I'm seeing. No panic from the people who've been in crypto long enough to know better. These are veterans. They're not going to lose their cool over a routine market dip. Higher, my friends, higher. Even if we dip a bit first, it's not going to change the destination. And just to be clear, I'm not a financial advisor. Nothing I say here should be taken as advice to buy or sell.